Good morning. Welcome to Critical Point Podcast. This is Rich Posson. It's May 28th, Thursday, 8:29 a.m. Central Time, and this is about the stock market. Let's first look at the Nasdaq 100 E-mini futures here as a proxy to cash and proxy to the entire stock market alongside the S&P 500. Basically, we can see we have some technical things going on here, trend line of support, and the market's just starting to trade below it. We have some resistance here, and the market respected it yesterday. We have some prior upside objective levels here, and the market has respected those and turning down. Okay. Now we have daily momentum, such as a stochastic indicator, also trending lower here, but the market really has not yet responded. So a violation of yesterday's low probably means it put in a model level 3 top. So what is the level 3? Well, it's basically an uptrend and downtrend during the month. Simple as that. It's reflecting how we do business for a month. It's buyer-seller interest, but sometimes it actually has something to do with real supply and demand, fundamentals, information that can change long-term swings in fundamentals and price. At any rate, what we have is that the market is stalling out here, hesitating and rolling over. Now, what we want to do is switch over to the S&P 500. And here's the daily chart, and we can see the level 3 uptrend up since May 14th bottom. It's in the side of the objective window for a top, meaning the level 3 trader should stop buying. Okay, and it should be a setback into level 3 bottom. Now the thing is, it may only set back for just 1 to 2 days, and then it's going to move higher again for the next level 3 uptrend because larger trends are still up. Now we have the daily stochastic is returning to extreme overbought again. It pulled back a little bit, hesitated, and now it's moved up along with price. So we'll just have to see what we get out of this, but I think you want to look at the 200-day average and 100-day average and 5-day average that had been resistance and now could be potential support here for the June mini S&P 500 futures, and even in the cash, watch that 200-day average. Okay, at any rate, we're looking for a modest setback here before probably higher, but I have to warn you, this market is getting overbought here on the weekly charts and for the larger trends during the year. So we're getting close to an important top. So this is the weekly chart, and we have the level 3 trader was creating these pops and drops along the way, but notice they had to fall in line with the larger level 2 trader who bought from March into April, stalled out April into May, and returned to buying. Alongside this is a level 1 trader who started buying in March and has been buying all along. They might have hesitated a little bit trying to buy dips, but they weren't interested in betting on a downside like some of the level 2 trader. Okay, and so we have both of those types of traders now who can create these largest trends during the year. They're going to help create the bias of all those smaller trends and those smaller type traders. They're bullish into what the model is forecasting as time for a top, week of June 8th on into week of July 6th. So this gives us a gauge how long it's going to take them to allocate enough money where they can't buy anymore, and tops are made when buyers refuse to pay a tick higher. And then just a very little selling can bring it down, and then if you can actually bring in negative news or even a shift in the more important fundamentals longer term, then you get more selling, that the seller interest picks up. Okay, so you seldom do you actually sellers just nail a particular price and cause a top. You got to get those buyers to back away. Okay, now it is possible, instead of allocating too much or their technicals are too overbought and they don't want to allocate more, it's possible they switch to negative or bearish forecasting or flip the bias of their fundamental list towards bearish and they back off some. But it's also possible we get some developing news. That developing news could be the U.S.-China trade war, as well as China versus Hong Kong, and it may develop into Hong Kong versus U.S. So this could be something that could create this next top for level 2, level 1 traders that turn to the sell side, and then what's going to occur is the level 3 trader is going to flip to doing more selling on the downside, less buying on the upside. They will fight the level 1, level 2 trader at times, but they won't win. There's going to be this overall bias of lower. So we do have some potential development here in the news as of yesterday and today, when China is passing a new security law in Hong Kong, when U.S. is saying that could reduce Hong Kong's independence but still tied with China. In other words, the U.S. is saying maybe that means that they don't get U.S. special trade status. So we may wind up with the trade problems with Hong Kong, and this may cause problems with China. And then you got the Hong Kong China problems, and then you got the U.S. China problems that we've had for some time. This could all escalate and blow up on us. Now we also have the virus, which is still with us. And even though the world's opening up, reopening its economies, the U.S. is reopening, we're seeing some spikes in cases and deaths. Maybe it's just temporary as we reopen, but what if we start a second wave? So there's still issues with it. It seems like the stock market's comfortable writing off the virus. I've noticed when you go back and study things like depressions and recessions, you can get stocks that go up anyways. And you can even get the stock market flipping up during a recession and depression. And it's kind of like they just refocus on saying, okay, we have more employment than we used to have, unemployment, but you know what? The people who are employed are still spending, these businesses are still going to work, and we see a light at the end of the tunnel. Someday we'll be back to a growing economy, and they just want to buy stocks anyways. It's crazy. And then this time around is different in the sense that we have more Federal Reserve support, stimulus, the Treasury's out there trying to help stimulus, and then we actually have government policies trying to stimulate businesses and consumers. Okay, so the investors are just trying to shrug this off, and I think they're going to have a little minor day of reckoning here. When it tops for level 1 and level 2, and there will be a level 3 that will coincide with it, it's just they're so frequent that there will be many other level 3 tops as this swings lower into a level 2, level 1 bottom. So in other words, they're all going to converge here in a few weeks. It's kind of like a clock striking midnight. All the hands are at midnight, right? And then as you get past midnight, you see all the hands are doing a little something different, but they're actually progressing to the next time it's going to be midnight, right? So at any rate, this is what's going on. Everything's going to converge, and we're going to flip to a net bias of selling, and we should see a bottom no earlier than week of July 6th, and it could delay all the way into week of August 10th. My guess is this is topping out in June, and I think it tops out in the early side of what we're projecting, and the market's coming down. It may only come down a few percent, but my idea is if it can hold in the 3100, 3200 area, it's probably coming down to the 2800s. And obviously, if it just bumps its head here at 3050, which was one of our little intraday, interweek objectives and daily objectives, then it increases the odds of 2800s. But it's possible it goes much lower. It could even go down to the 2400s and still be a long-term bull market. And I think we are in a long-term bull market still. So there you have it. One last thing I wanted to throw at you was the monthly chart. So we just got to watch out for a negative reversal. We get a negative weekly reversal, get some indicators selling. Even if it hasn't topped out for the level 1 in terms of what the model's suggesting, I'm going to be concerned it topped out. Here's what I want to show you. Draw a trend line across the 3-year business cycle high. Draw it across the September high, which was a clue that a brand new 3-year cycle bull market was going, and it was going to last into 2020. And even with that collapse, it fully recovered. It worked after all. But this was the latest of the 3-year to trigger or say coincide with the more important 9-year cycle that leads to major bear markets and recessions. And we got it. Okay. Now, this trend line, form a resistance, because it also worked as of July 2019. And it even hesitated there for what took it 3 months to finally break through it, the 4th month. Anyway, this is resistance right around 3107, I believe. Well, I can't, we need to have to zoom in on this chart. I would use around the 3100 mark for the cash S&P as potential major resistance here. Have a great week, and we'll probably give you an update again tomorrow. But frankly, I think on a very short-term basis, this market is probably going to top out today into early tomorrow. Probably won't bottom till late tomorrow into Monday. So I think we're going to have at least a few hours of setting back here. It could expand into next week, so we have a 2 to 3 day setback. And that should try to move higher again. I think it's going to be a struggle, but I'm watching for maybe that major level 2, level 1 top as of next week. But ideally, we should start looking for it week of June 8th or later. Thank you, and manage your risk relative to analysis of others and your own.